Okay, everybody knows Amazon is a retail colossus. It's crushed competitor after competitor. But you know what? In my opinion, retail's not even their best business. The future hyper-growth of this company may be all about Amazon Web Services, AWS for short, the pioneering provider of cloud computing capacity that's become the undisputed leader in the field. Last year, AWS generated more than $25 billion in sales. If they were an independent company, you know, they'd put them as number 119 on the Fortune 500 list. Plus, they're still growing like a weed. Get this, they're up 47%. It turns out providing the backbone of the cloud is a much more higher margin enterprise, too, than selling people stuff over the internet. So I think it merits a closer look, which is why I am so excited tonight. We are thrilled to check in with Andy Jassy. He is the CEO of Amazon Web Services. Yes, to learn more about the incredible business. Andy, welcome to Mad Money. Good to see you, sir. Thank you so much.
I appreciate it.
It is an honor to have you for what you've built. It is incredible. And what I think people don't realize, we talk about the cloud so much because even though you're growing at 47%, even though you have 25 billion sales, we are very early in this part of your company.
Yeah, sometimes we remind ourselves, even though it's a $30 billion revenue run rate business growing 45% year over year, it's the early stages of the meat of enterprise and public sector adoption in the U.S. Outside the U.S., they're 12 to 36 months behind, depending on the country and industry, so it's still really early days.
Can you explain to people the value proposition? Because I think people think that it has to peak until they get the economics.
Yeah, the conversation starter when people move to the cloud is always cost. And if you can turn, instead of laying out all that capital for data centers and servers, and instead only spend what you consume, that's usually very advantageous. So capital expense turns to variable expense. Variable expense is much lower than what most companies can do on their own because we have such large scale that we pass on to customers in the form of lower prices. We've lowered our prices 70 different occasions in the last 10 years. You know, and then you get real elasticity. You provision what you need, and then if it turns out you need more, you provision more. If you don't need any more because you're at the peak, you just give it back and stop paying for it. So price always is the conversation starter. But the number one reason that enterprises are moving is speed and agility. Usually, if you want to try an experiment in your company, it takes 10 to 12 weeks to get a server, and then you got to build all the infrastructure software around it. In the cloud, you can provision thousands of servers in minutes. And then because we have 165 services that you can use in whatever combination you want, you can get from an idea to implementation in several orders of magnitude faster. So you can innovate much quicker.
I wish everybody were an entrepreneur. You'd be listening. We ripped out another rival. I'm going to mention that, a rival, and went to you at the street. It was so fast. It saved so much money. It was instant. And I didn't even believe it could be this good. And I'm not kidding. That's not a commercial for it. It just happened. It's empirical. Lyft is a good example. Just this week, you got Lyft all in. What a great customer.
Yeah, absolutely. I mean, and what Lyft's doing in the space is pretty amazing, and the pace that they're growing at is really amazing. And so to be able to scale the way they have, first as a startup and then a fast-growing business, and then what they would tell you is that they're able to invent and change the customer experience so quickly, several orders of magnitude faster than they could if they were doing it on premises, that it's really helped build their business.
Now, people, their eyes glaze over when I use the term machine learning, but I am dealing with someone right in front of me right now who is at the essence of the machine learning revolution. It is a revolution, isn't it?
Yeah, I mean, I think that the vast majority of applications in the next 5 to 10 years will be infused with some sort of machine learning. We're in kind of a golden age of computing. And there's almost every company that we speak with is interested first in being able to, most importantly, being able to take their own data. Most companies have gobs of data. Even startups today have gobs of data. But it's so hard to know what's in there, and it's so hard to know what the gems are, and it's so hard to know what's going to be the predictive pieces that change the customer experience. And our machine learning capabilities are going to solve that for a lot of customers, we hope.
Okay, so Mark Benioff buys Time Magazine, and they are a good customer. What does Time Magazine need Amazon Web Services for?
Well, I think very much the same way that any company does. Again, if you are building technology applications and trying to build consumer experiences, you want to do as much as you can for as little money as possible, and then you want to be able, when you have ideas, you want to be able to move fast. So one of the things that happens at companies that build on the cloud is it used to be in the old days where it was so hard to get anything done, none of your workers, none of your employees spend any time outside of work thinking about new ideas, because why bother? It was so demoralizing. You never get to try it. But because you can provision instances and servers in minutes, what you find is that people spend their free time thinking about new customer experiences because they know they can have something they come up with over the weekend and come in Monday and try it for $1. And so it changes how many people in your company think about innovation and where you get new ideas from throughout the company.
Well, I think people should know that it's not all big companies. There's a huge percentage of smaller companies that either start on Amazon Web Services or know it's a better bargain. A gigantic number of small guys.
Yeah, we have most startups have built their businesses from scratch on top of AWS. And some of the big examples are companies like Lyft and Airbnb and Pinterest and Slack and Domo and Robinhood. It's a very large number of them, but there are a lot of businesses that either haven't gotten big yet or are just trying to build a business. And one of the interesting things that happened I remember in 2007, 2008, when we had the recession, there were all these very gloomy emails sent from a lot of venture capitalists saying, don't expect to get funded. But actually, the number of startups kept growing because as opposed to having to go raise money to pay for data centers and servers, people can try several instantiations of their idea on top of AWS. And if it isn't getting traction, you pay something like 80 cents a month or $1.50 a month, whatever your usage is. And so we have loads of companies that are trying to build businesses on top of us that really only pay anything meaningful when they have traction.
Well, I think that your role in the American economy, you're too humble for this, I'll just say it. When I hear Jay Powell talk and the Fed talk, and they keep saying, we don't know why there's no inflation. And then I think about all the price cuts that you put through. It's your company that has been instrumental in having keeping inflation at bay while we grow. Would you think that's too overstating things?
I don't know. It's always hard for me to measure the impact we have on the overall world. But what I can tell you is the way we think about it at Amazon is that in every single one of our businesses, we have never met customers who don't want prices to go down. And so if the center of your gravity is customers, which it is in every single one of Amazon's businesses, you're always working relentlessly to find ways to take cost out of your structure so you can give it back to customers in the form of lower prices. It's actually really easy to lower prices. It's much harder to be able to afford to lower prices.
Well, can I tell you that you're the first guest who has sat in front of me and said it's easy to lower prices. Almost everybody thinks it wrecks their margins, and therefore they're never going to please anybody.
Yeah.
You please more customers by giving them a value proposition.
Yeah, we're much more focused on the long term than most companies. We are trying to build a business and a set of customer relationships that outlast all of us. And as such, we think if we help our customers get more done and are successful on their own, even if it means lower margin percentages, over time, we'll drive more absolute margin dollars, and they'll be more successful, and we'll ultimately be more relevant.
But you're also a very competitive person. I go on all these Oracle calls, and it was one last year. Larry Ellison said they think of themselves as a competitor, Amazon. So it's kind of embarrassing when Amazon uses Oracle, but they want you to use Aurora and Redshift. They've had 10 years to get off Oracle, and they're still on Oracle. Can we end that?
Yeah, well, I think Larry has a certain view of the world that isn't always steeped in what the facts are. But if you look at Amazon, we started the company at a very early stage, and we had Oracle, and it takes work to actually move away from Oracle. Lots of customers are learning this as so many people are trying to move away from the commercial grade legacy database providers like Oracle or SQL Server to newer engines like Aurora. And we now are 88% of the way through moving all of our Oracle databases. We'll be 100% by mid this year. And then we turned off our Oracle data warehouse in November of last year and moved it to Redshift. And so we learned some very interesting patterns that customers are very excited about copying. And we don't really meet a lot of customers who aren't looking to move away from those databases to Aurora.
I usually don't ask this to people, but I got to because you're here. You seem to really love your job.
I do. I'm incredibly lucky. I've been at Amazon. I finished my last final exam in graduate school the first Friday of May in 1997, and I started at Amazon that next Monday. And I didn't know what my job was going to be. I didn't know what my title was going to be. I didn't know what group I was going to work in, but it was very important to them that I started that Monday. And if you look at how I've kind of winded around for 22 years at the company, nobody could have ever predicted it, and I'm incredibly lucky to have been part of this adventure. And the great thing is, as exciting as it's been the first 22 years, there's so much in front of us all. It's very early days.
Now you see one of the main reasons, you're not a reason-your person, but why I think that Amazon is just such a great company. That's Andy Jassy, the CEO of Amazon Web Services, AWS, the most exciting part of Amazon, if you ask me. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.